Welcome to the Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we have managed more than $1 billion in that recovery. Good morning to all of you, and thank you so much for joining us here on the Recovery Report Live to talk about important issues that may impact you as policyholders. Whether you're a business owner or a community association, this is information you can use. Today, I want to talk generally about claims handling practices. Just a little bit of a refresher for business owners and community associations. We are in the midst of hurricane season, but we're also still dealing with major fires out west. Throughout the Midwest, we have still some lingering hailstorms, tornado activity. You have also have fires as well. So there's many things going on that are impacting our markets throughout the entire United States. And we want to make sure that you understand what you need to be doing in the event that you actually experience loss or damage to your property or your business, right? So there's two parts of that. There's the loss or the damage. And this is a hotly debated issue, the loss or the damage. The loss being most often your income related issues, and your damages being your real property, actual damages to your building. Now, those losses, the impact of those losses may be related to the property damage or the shutdown of your business in some way, whether it's government related, like we saw the pandemic and some of those other things. So, and that is absolutely something that is being debated right now in court. And we've actually seen some positive outcomes in those cases. So check out our website and our blog posts. We want to make sure that you have that information if you were impacted by the pandemic. The tide has somewhat changed, and there may be light at the end of the tunnel. We don't know for sure, and we don't know how it's going to impact all of you, but we can say that there certainly has been a slight change in the tide as it relates to this pandemic claims. But getting back on topic with regards to the claim handling, I'm going to call it a refresher, right? To make sure that you know what you need. I'm going to start right at the top with you just sustained the damage, the loss to your property, the loss to your business, right? You just sustained it, and there's most often this immediate versus prompt notice issue, right? So we typically see most policyholders who entrust in their brokers and the insurance companies that they're going to do the right thing. They immediately give that notice of the claim. Now, the policies themselves, almost always, I've never seen one say it, so I'm going to say almost always, because there may be one out there that does it, but I have never seen a policy actually state that you're required to give immediate notice of anything. Now, it may say prompt notice. Now, prompt notice is very different than immediate notice. And that's something very important for you to realize, that as a policyholder, you need to be giving prompt notice, not immediate notice. And I say that because let's say your community association suffered a significant fire loss and multiple floors were damaged and people are running all over the place. The alarm is going off, water is pouring all over the place. The fire department's out there. Maybe there's several different fire departments out there helping put this thing out. And your focus is on, oh my God, insurance, right? No, never, right? So now I have actually seen where property managers have picked up the phone and immediately called their broker while the building was still on fire. And there's absolutely no reason for that. The condition of the policy is about prompt notice. It gives you the opportunity to focus on the life and health and safety of your unit owners, of your employees, and making sure that they have and their needs are met in the immediate moments after a loss occurs. Now, and that may be several days. So, let's say you're in a multifamily building and you have unit owners that are displaced and they can't access their things and they need to go to a hotel or another part of your property and take up residency there and occupy what otherwise would be a vacant unit. Now, there's certain things you need to go through in order to make accommodations for them. Maybe your lease requires them to sign a new lease immediately to do it. Well, that's clearly more important than running to call your insurance company. Because the reality of it is that until the fire's put out and until you've had the opportunity to allow the dust to settle and to get a full grasp of what your damages may be at that moment, you really don't know what to say to the insurance company. And what you may say to the insurance company can certainly prejudice you. And that brings me to my second point, which is about what do I say to my insurance company when giving notice of the claim? So we just hit on the issue of immediate versus prompt notice, and the emphasis being on prompt rather than immediate. Take your time. Understand that the focus is on the health, the safety of your tenants, of your unit owners, of your employees. Make sure that you have collectively taken care of and met their needs first, and then give notice of your claim. And what you should say to your insurance company is what you know. Not what you assume to be true, but what you know. Don't step into the shoes of an expert. Don't assume that you know something that you have no experience in managing or handling, such as plumbing or roofing or pretty much anything to do with construction or insurance, because you are a business owner operator, you are a restaurant owner operator. I would never try to go into the back of your house in your restaurant and run your restaurant. It would be a disaster. You would not make money. It would be a complete failure. So don't try to assume that you understand coverage, that you understand the intricacies of why the building caught on fire or why the pipe broke, or whatever wild assumptions that you make. And it is wild, even if it's close to the truth, it's still wild because in some way it could be used to prejudice you. And prejudice you meaning that while you may not think there may be an immediate impact to it, and you may be thinking that you're helping the process, what you may actually be doing is delaying the process. You may actually be prejudicing yourself in its recovery, meaning getting less money where you otherwise may have coverage. Now, it may not be justified and it could be disputed later, but that's going to take time. So slow down. Take your time through the process. What you say to your insurance company is what you know. So let's say there's a 10-floor fire, and I'm exaggerating the situation simply to illustrate my point. 10 floors were caught on fire, and of those 10 floors, there may be 40 units spread out among those 10 floors. And so but you don't know how all of those units were impacted by that fire. So what you do know is that on 10 floors you have 40 units. So if the insurance company is asking you, well, what are the extent of your damages when you're giving notice of the claim, or maybe you called your broker to give them notice of it, and we're going to talk about that in a minute, and you call them up and you say, yes, I had a fire at the building. What I know right now is that 10 floors were impacted by it. There's 40 total units on it. A lot of times I've seen actually inside some of the recordings done by brokers in the accord forms, which as a sidebar, something I've never seen written into a policy or a requirement of a policy is to fill out one of these accord forms. So, and they write in there that there was 10 floors and 40 units affected by the fire. But again, the follow-up question may be though is, of the 10 floors and the 40 units, how many are affected? You don't know at that point because soot and smoke have finding its way into various different areas. It's much like water, right? When water hits the floor, it runs. It runs and it makes its way into cracks, into penetrations in the concrete. Some of them might be obvious because they're buried in walls and were not properly filled in by the contractors when they were building the building. The water amazingly has an ability to find its way into areas in which you don't initially see it or expect it to be, somewhat like soot and smoke. So again, taking a step back, slowing down, thinking about the situation. What do I know? I know I have 10 floors and 40 units. Right now, we're still assessing the situation. Something very easy to say to a broker or an insurance company representative. I'm still assessing the situation. All I know is right now, we're focusing on the health, life, and safety of our unit owners and our tenants. I can get you more details later on in the process. Right now, I just want to make sure that notice is promptly given to my insurance company and that they're aware of that. I can tell you for sure that there are 10 floors affected and there are 40 units on those floors, and I'm not unsure or unclear as to the scope of the damage. That's it. No more detail is needed. In fact, that's probably way more detail than you would ever need to give. Really, honestly, the policy is very typically unclear as to how much information you need to give, other than outside of that you need to give prompt notice of your intention of making a claim. That's pretty much it. So if you're a broker, here's the walkaway lesson from the second part here is that if your broker or agent asks you to fill out an accord form or put anything in writing whatsoever about the scope of the damages that you're making a claim for, first off, it's not required in your policy unless it's explicitly written in there that you have to put it in writing, which again, I've never seen that before, but doesn't mean you shouldn't look for it because, maybe there is a policy out there that actually says that. Now, we've handled $1 billion in recovery and thousands of insurance claims, mostly commercial policy related, and I can tell you right now, I've never seen it. But also, what is included in your notice is also important, whether orally or written, if you make the mistake of putting it in writing, and making sure that it's general information about the scope of the claim. Because again, what you may say may be used against you in the future and used to prejudice your claim. So they may argue, well, you only told us that there was 1 floor and 5 units affected or damaged by it because you assumed that on the upper floors, the floors above it, the next 3 floors, that they were unaffected by the actual fire. So you want to be careful. You want to make sure that you only give general information about it when you're giving notice of the claim, enough information for them to record a claim and to come out and do their own investigation of it. Also, be careful the words you use, right? So the word water is thrown around all the time, or other words that are used to describe water losses that occur. Now, there's explicit covered losses in your policy. One of those is water. It literally will say a number, period, water. It doesn't say pipe break. It usually doesn't. Okay, now it may describe what happens if a plumbing system fails, right? Which in effect is a pipe break. But I've rarely have seen, and I can say I've seen it in a couple policies, any sort of description of water damage where it includes the actual words pipe break, okay? But pipe break is something most often construed to be sudden and accidental. And something that's sudden and accidental is how you get coverage, right? Most often, unless there is some separate limitation or exclusion specifically for that sudden and accidental event, it's almost always going to be covered, especially under a special form policy where you have general coverages afforded to you as a community association or a business owner. Now, this is highly technical stuff, and this is simply to demonstrate to you that you don't know as much as you think you know. And quite frankly, most often when you're reporting your claim to your broker, why don't you ask them if they have a copy of your policy in front of them to help you understand what you need to give them information in order to make a claim? How are they going to give notice? What are they actually required to do? Most often, that broker won't even have a copy of your policy. More of a reason why that information that you're providing needs to be general in nature and only enough to make sure that the insurance company properly responds and promptly investigates your claim. Now, who are they investing in a claim on behalf? Not you. They're investing in that claim on behalf of the insurance company, and that's also a very important note. A lot of times I'm asked, why can't my broker just adjust my claim? I gave them notice of my loss. They reported it to the insurance company on my behalf. They told me what I was supposed to tell them. They're the ones who sold me the insurance policy. Why can't they adjust the claim? Just like the insurance company adjusters don't represent your interest, nor do your actual brokers in your claim. They don't. They have a 220 license most often. In different states, it varies in what type of licensing numbers associated with it, but they have a license to sell a product to you. They do not have a license to adjust a claim. That's a totally and completely different license. And for that reason, they are not there to represent your interest in a claim. In fact, most often, their fees are paid directly by your insurance company. Now, you've agreed that they're owed a certain amount of money as commissions in those claims for placing that insurance. But again, they typically have a separate contract and agreement directly with the insurance company to sell their products to consumers, who are you. They broker, they're in the middle. That's not to say that they're going to take sides, but it's to say that they, in fact, don't entirely represent your interest. Now, they may try to advocate for you to an extent, but again, they have to protect also a business relationship they have with those companies. So they're kind of in a precarious position, right? They don't want to push too hard on one side or the other. Sometimes when a broker feels that they're losing the account, they may not do anything for you or may protect the interest of the insurance company. Or if they feel like the insurance company is doing wrong by you and they're moving you to another company anyways, they may actually take, make more of an effort to actually advocate for you. Now, I love the brokers that advertise that they have licensed adjusters on staff, or they have public adjusters, or someone that's formally licensed. Typically, the individual on their staff, if they do carry a license, was most often an insurance company employee or an independent adjuster. And their only experience is advocating for insurance companies, which is very different than advocating for a policyholder and understanding what the policyholder actually needs to prove their damages, and not simply solely and focus on the coverage issues, which most independent adjusters and company adjusters are tasked with doing. So pay close attention to who's doing what and what is actually representing your interest, right? It's not the insurance agency, it's not the insurance company. The who of that are your brokers, the desk adjusters, the examiners, the independent adjusters, the company adjusters. They change titles all the time. And those individuals, again, are not there for you in the claim. Again, it doesn't mean they're bad people, they're working against you. Some of them may be working against you, who knows, but generally speaking, they're not. In fact, a lot of them are friends of ours. We've worked with them many years, we have great rapport with them. We have a great working relationship, but again, they still have a job to do, and they're going to continue doing that. So just understand where that's coming from, where their information's coming from, why they're doing what they're doing, and why they can't do certain things for you. And honestly, don't be misled by this advertising and marketing about how we have claims people on staff and an insurance agency or brokerage. Honestly, it's great that they have them there. But again, they're not going to come out to the property after a major hurricane event wipes out an entire area and go and assess each and every one of their policyholders' damages and make sure that proper prompt notice is given in the correct manner in which it needs to be given. And brings me to my fourth point, which is about how does that notice actually given. And the way the notice is given is usually predicated based on a form inside these policies. Now, for community associations in today's market, you're most often being put into a layered program policy, meaning there's many different insurers. And unfortunately, brokers are not doing a very good job explaining what that actually means when it comes down to a claim. What it means when it comes out of claim is that there's a increased amount of complexity to how notice has to be given in order to make sure that everyone has been given the notice. And I mean everyone as in the interested insurers or the interested insurance companies. And it's important to make sure and to verify in writing at some point that in fact all of them have actually put on notice. And even when you do that, they sometimes will still argue down the road, if there's a dispute, that they weren't given notice, even though that all of them have agreed in the market to hire one individual or company to represent its interest in the claim. If that individual fails to give its notice to all of the interested insurers, it makes an assumption that the claim is only X amount of dollars versus the real amount of money, which they ultimately end up paying. You may create a dispute within the market, which unfortunately is adverse to your interest as the policyholder. And that's a really complicated and confusing point, but it's just, again, further demonstrating what you don't know and what we are experiencing and dealing with here at GlobalPro all the time as insurance coverage experts, right? So as it relates to the people that are coming out to your property, one of the trends that we're starting to see is that insurance companies are using a lot less people for a lot more claims. And unfortunately, some of those people aren't even within the same country in which the claim is being adjusted. So for instance, we actually experienced in 2017 adjusters coming into the United States, into Florida, into Texas, into the coastal areas and where we were managing and handling claims in the 2017 storm season, where you had various different storms, right? You had Maria, Harvey, Irma, right? And others since then that have affected the coastal area. And people were coming into the country from other places that were not licensed to actually manage or handle claims. In fact, some of them at one time carried license in the United States, so they were fully aware of the process to getting the license to adjust a claim in the United States on behalf of an insurance company, but they allowed it to expire and never renewed it and then continued to provide and sell their services to insurance companies. The problem with that is that they're not familiar with local market changes and local business practices, which in many ways impact how your claim is paid or what you're going to get paid and how much you're going to get paid. And be careful with it, especially if you end up in a dispute and a lawsuit. At times it may be impossible to serve these interested parties and obtain copies of their files. Even if you were in agreement with them at some point to pay money or do something, they run for the hills, almost literally, and hide the information, almost literally. And actually, I think it's intentional at that point. So you have a lot less people managing a lot more claims, and unfortunately in 2022, if we were to experience a major hurricane in the coastal areas, I think you would see a grave situation where you have a complete lack of resources, and I think that will fill the headlines about how slow the response is, because you're already seeing it. in the Midwest and out west with some of our various clients. I mean, in talking with our team in Texas, led by Rob Bowlby, I can tell you right now, we're again dealing with a lot of the same people and a lot more claims, right? So it's going to be an issue. It's something to plan for, something to anticipate, something to be aware of. But making sure you ask for that license, ask the person where they're from. Ask them for a copy of their license. Ask them as to where they're registered and what gives them the capacity, right? Or the competency, rather. I think that's actually more important than capacity. They don't have the capacity, let's just say that. The competency to be able to properly manage and handle the claim and pay your benefits, right? So, and I honestly think that if you feel as if their lack of competency in the local market, in business practices, whether United States or even in your, the small city in which you're living in, where's the local department stores? Where do you get resources, building supplies? Maybe you had to go to another town to get them, right? You're more rural. That is an important factor because that's additional shipping expense and costs, and with fuel surcharges on a rise and things like that, that has to be part of the consideration in your claim. But they may not be aware of that. Why? Because they're from New Zealand or Canada or the Bahamas, and you live in Dallas, Texas. So they may be totally unaware of these situations, and that could be very, very important information for your claim. So check that stuff out. Make sure you understand that. One of the changes that we saw in the Florida legislation in this last special session was about the ability to be able to submit to the insurance company in writing a request for a copy of their evaluation or estimate, and they have to provide it to you. That has always been a general business practice at GlobalPro. We've always done it because if it does not work out, we're in the adjustment process and you do need to litigate, we can point to that and say, look, we've been asking you for your evaluation of damages. You say it's below deductible, but you don't actually substantiate or support it. You don't provide us any estimate of damages, even if it's below deductible, to determine how it is that you came to that conclusion, right? Well, you now can ask for that in Florida. And in fact, I feel as if you always could have, but now they have a certain, obligation under the law to actually give it to you. There are other states throughout the United States that actually have the same requirement. So make sure that request is out there. If you get a letter and there's no estimate attached to it or no justification for the lowball payment or check that's attached to the form and you haven't heard from anyone in a while, make sure that you put in writing that request for the support or evaluation that led to this conclusion or these conclusions, and they can give it to you. So we hit on other prior broadcasts, and a point I want to bring up, again, just a refresher on the claims handling. This deductible phobia, we've talked about it many years in the past. We talked on many broadcasts and many classes I teach about this issue of deductible phobia. Deductible phobia is a real thing. People are always concerned about the deductible phobia. You also have these loss run phobias where you think that by filing claims your rates are going to go up, you're going to get dropped. I was literally earlier today talking to a broker, and we were talking about rate increases at some of the properties in which he's placing insurance, and he has a huge book of business. And he was telling me about one property that the insurance company had given notice to this association 2 years ago that its roof needed to be replaced. And they had been going through a lot of renewals with the same insurance company. And they gave them 2 years to do it, and they didn't. And the broker was able to say to that association, look, I told you guys, if you don't do this, they're not going to write your insurance. And if they do, it's going to be at a substantial increase, 150%. 150% increase. Now, on a multi-million-dollar premium, that is a lot of money. So it's important that you realize that there's a lot of other reasons and factors that go into evaluating your rating for your rates, the amount you pay in premium. And most often when it comes to property, whether it's business, homeowners, community associations, whatever it may be, it almost has nothing to do with your claims history. And I say almost only because they're the outlier situation. If you are in the business of making claims, and I'm not talking recovery, actually getting paid money, but you're just making claims, which unfortunately we see this a lot with some of the community associations where they call their broker and the insurance companies directly all the time for claims. And every time water hits the ground or they think that there's an issue or a crack in a stucco, and they want to understand whether or not they have coverage for something because they got a bid for $1 million to do a repair. They will just call the broker for any good reason just to say, hey, I have this expense coming. Do you think it's covered by insurance? And it goes on a loss run. Well, if you're in the business of making claims, I don't want to be in the business of selling you insurance, right? So that's the caveat. So and again, usually has nothing to do with the amount of those claims being paid, more so about the frequency. And the frequency is part of the evaluation in a lot of these actuaries and underwriters when they're actually trying to rate or give you a rating for your premiums, right? And the cost of your insurance. And the frequency I'm talking about isn't claims. It's the potential. It's the potential claim. And that's why coastal areas have higher ratings and cost more money. And again, it's the potential. It's not because you had it. Because when you have it, you collect the money and you repair the building, you're fortifying that. Your actual risk of something happening theoretically has gone down unless outside forces in the environment have increased the risk of something else happening again, right? So, and it's a complex thing, and I'm glad this is being recorded and available for you to replay and listen to again so you understand the thought process by which we most often see the valuations for insurance on any type of insurance. But when it comes to property, really, unless you change the geographic location of your physical building and put it in a riskier location where there's more chance of something happening in the future, you're usually only going to see market changes lead to increased costs or reductions in costs in your insurance, which has nothing to do with your actual claims and your losses. Unless you're in the business of making claims or you have a high frequency of claims themselves. So allow us to help you if you need any of this more information about these things. I had so much more I wanted to talk to you about, but I kind of got off on tangents. I got down in the weeds on some of these things because I think they're important issues. And I just got done talking today with a very well-known broker that's managing a tremendous amount of policies. And these are some of the things that we were talking about, openly. And this is information known by most everyone in the industry. Now, what you read about a lot of times is by pundits and lobbyists and things like that. But when you kind of pull back the layers and you get to the decision makers and the actual people doing this work, there will be very little disagreement as to much of what I've said today. Now, they may not agree entirely with some of the points and they may have a slight difference of opinion, but I can almost guarantee you that there will be a general agreement or understanding or an understanding of my opinion and perspective of it, because while they may slightly differ in it, it's only because of a one-off or a separate experience they may have differently than what I have. And they may share with me and I'm going to say, you know what, in that situation it may be different. But generally speaking, you will certainly have an agreement among decision makers about much of what we discussed here today. Information that's important to you, to understanding what is actually impacting you when it comes to giving notice of the claims, to coming to buying insurance, to going through the entire process, to making sure that when you do suffer a loss or damage to your business or your community association, when you do recover, how that may impact you in the future and placing insurance. Those are all super important issues. Some misleading information that, again, I don't actually think it's coming from the decision makers within companies on either side of the table. I actually think it has a lot to do with, again, interested in the lobbying efforts, the media, and some pundits that have some sort of agenda that unfortunately does not apply to the real life situation and certainly different. So if you need assistance with this stuff and you do go out and hire, and the last thing I want to leave you all with here today as a refresher on the claims handling is that make sure you ask for credible references. Recently, we have a longtime client was considering the services of another insurance expert, and that individual wasn't even a licensed adjuster. We found that out and provided the information to the client. And the reason why the client was interested was because their cost was substantially less than what we were charging for our services. Well, first off, they're not licensed to actually do the service in which they were trying to sell. They are in fact in the owner's rep world. We went into some research about the company and learned that they were they had insinuated on their website and some marketing materials about their ability to help manage situations as it relates to insurance claims and things like that. Well, that's tantamount to actually adjusting. So you have to be licensed to do this. Second of all, they have no history of actually doing it. So when they provided references, I encourage the client, reach out to those people, contact them, find out what's going on, why they're doing it. There may be a reason why, again, they're offering these services at such a substantially below market rate. It did not make a whole lot of sense, and this is something important to do. Also, too, we've actually had some people that have gone out and tried to solicit some of our existing clientele and offer competitive pricing, stuff that's within the range, and try to get into the business of dealing with commercial losses. But as under further evaluation, investigation, what was learned was that they mostly do single-family homeowner claims. They do hundreds of them. In fact, I was actually impressed with the volume of homeowner type claims they do, which is nothing, again, like doing a commercial loss for a community association or business. There's many different facets of coverage and sublimits and manuscripted policies and very specific policy conditions and issues related to commercial that you need a team of insurance coverage experts that like you have here at GlobalPro. So it's an important aspect. Make sure you check your references, make sure you check licensing, make sure that the people that are representing your interest or even the insurance company's interest are licensed to do what they're telling you they are going to do on behalf of either party. It's super important. I want to thank everyone for joining us here today. This has been an awesome opportunity to refresh ourselves on the claims handling, to talk about, almost like a summary of some important issues that I have gone over the last number of broadcasts. Also, I know just last week, our Senior Vice President, Matt, had joined us here to talk about also important issues, but we're going to continue to bring on people from our own team, other experts, and talk about these important issues because that's what the Recovery Report Live is all about. And if you haven't already, hit the subscribe button, like us, follow us on all the social media, and check out our website, globalpro.com. Click on the resource section, download all the forms. If you don't see something there that you need as it relates to insurance, shoot us an email, give us a call. We're available to you 24/7. We'll see you next week, same time, same place, right here on the Recovery Report Live.